Good morning, everybody. Welcome to Trading Together. I'm Mel Gacee, and I'm so glad that you're here with me this morning. It's a Friday. Friday, everyone. And can you believe we're heading into Christmas week next week? I am just, wow, where has where has the time gone? It's crazy. So starting out the morning together, let me just talk about what the purpose of this stream is. What we're doing here is we are trading together live. So I'm going to take live trades in front of you. I'm going to analyze the market for you. I'm going to teach and train as I go. And this stream is geared for traders of all levels, but I'm really interested in helping new traders. So if you don't know how to trade, but you've always wanted to learn, you're in the right place. If you're here this morning, drop your name in the chat, say hi, let me get to know you, ask your questions, make your comments. It's all welcome here, okay? All right, looks like Gavilan is here. Good morning, Gavilan. And if there's a different name for you, let me know what to call you. But welcome, welcome. So glad that you're here. All right. So let's start out let's analyze the market a bit. We have come into the morning with this very high and fast push, right? So we were kind of going through what they would call chop sideways action overnight. It was very sideways for a long time. And you can see that here on this chart. This is the ES chart. That is the chart of the futures over the S&P 500. Now, futures and the SPY basically run all night. So we can sort of sometimes get an idea of what's going to happen the next day in the market when we look at what the futures did overnight. So let's take a look. I'm going to zoom out and I'm going to put this on a 15-minute chart so we can see it a little bit more clearly. Makes a little more sense here. And I'll make this screen a little bit bigger for you to see. All right, so overnight, so yesterday we had this climb and then this drop, but overnight we sort of just rose, right? Slow movement, little grinding upwards, but it didn't really go too far. So we kind of came up and rounded over. This is the middle of the night, about 4 a.m. Eastern, almost 5 a.m. Eastern. And we kind of get this round over and then we opened, right? So boom, just shot straight up to this level right here where we're at right now. And that level is roughly about 679, 680 on the SPY. It also is corresponding with our high of the day from yesterday. So we've got this line that I draw every day to mark off our highs and lows of yesterday, our highs and lows overnight. And that's what we're doing right now, is just kind of hanging out at this high of day. We've beaten it and we're just kind of hanging out here. So I'm going to go back onto the minute chart. That's a little background for what today has looked like so far. So we're back on the minute, and a couple of things I'm looking at when I take the trades. What I'm looking for is where are we in relationship to the VWAP? And that is this white line right here. This is the VWAP. Let me zoom out a bit so you can see it better. Where are we in relationship to the VWAP? Well, from the open, this heavy white line, you can see we opened up, we pushed right up over the VWAP, and we continued up in a very strong way. Then we kind of hit this top that I was talking about, 680 SPY, and we haven't quite beat it. So we came here, we made a double top, and we've really just been sideways since this strong run. But what we've done is we've stayed over the VWAP. We've tested it once, twice, and again, just a couple of minutes ago, tested the VWAP here. So that tells me, among other things, that we are bullish today. My rule, especially for newer traders, is if you're a newer trader, You want to take calls above the VWAP and puts below the VWAP. Now, calls, if you're brand new, calls are for when we want the market to go up. These are options. Puts are for when we want the market to come down. You can make money both ways. This is sometimes a surprise for new traders. You can make money when the market goes up. You can make money when the market goes down. You just have to get your direction right. The VWAP helps with that. The VWAP helps you with direction. So as we've seen this morning so far, we are bullish. We're not able to break down below the VWAP yet. Now, if we do, I could change direction. I could take puts, but right now we are mostly bullish. Okay. So what I'm watching for is signs that we should get into a call. Now, right now we've got this top right here at 680.1. I'm not going to take a call right here because we're just a little too close to the top. I don't want to take a risk. Could we go higher? Yes, we absolutely could go higher. It's a bullish day, but there's a little too much risk here when we talk about moving above this recent top. So we got to wait for that, and we'll wait for it to break. And if it breaks, we could miss the move. That's okay. It's more important to wait for your perfect setups, or at least the best setups you can get. That's what I wait for is the right setups to get in. Okay, so let's talk about what kinds of things tell us that we're in a bullish day besides the VWAP. Of course, the VWAP's already telling us we're in a bullish day. There are a few other things that tell us. So let me make these charts a little bigger for you. What I keep down here in the bottom right chart is the VIX. Now, the VIX is the volatility index, otherwise known as the fear gauge or the fear and greed. Basically, the VIX measures options on the S&P 500. Those options are out about a month. VIX is looking out about a month at the options on the S&P 500. And VIX is gauging if there's fear in the market or if there's complacency in the market. Are we risk off? Are we risk on? So when the market is fearful, we are risk off. The market is going to drop. People are going to pull money out. They're going to go to safer haven investments or go to cash. And that's when the VIX is rising. That means we're risk off. If I said that right, hopefully I did. The VIX is rising. We're risk off. People are pulling money out of the market. When the VIX is dropping, we're risk on. We want to go full forward. We want to buy. And the market becomes exuberant, the mood changes. Everyone's buying. That's when we see the VIX dropping. So that's kind of on a big picture, but we can watch the VIX even on the minute chart, which is what I have down here. It's very busy. You get false positives, you get false negatives. So the minute chart you have to watch out for, but it can give you a little idea of what's going on. So the VIX here, if we zoom out a little bit, you'll see is basically running inverse to the SPY. And that's what we would expect. So we can see the SPY climbs at the open, kind of goes down, up, but basically sideways. We see the VIX dropping at the open, exactly opposite, coming up, down, basically sideways. So that's what we're looking at right now on the mood, the atmosphere, the sentiment of the market right now. That's what we're looking at. So the VWAP is telling us we're bullish. The VIX is telling us we're bullish. Of course, the price action tells us we're bullish. And what else tells us that we're bullish? The Mag 7 will tell us whether we are bullish or bearish. So the Magnificent Seven is the name for the 7 biggest tech stocks in the S&P 500. These 7 or 8 tech stocks make up roughly 40% of the value of the S&P 500. So when we see these guys move in one direction, you know the S&P is going to move in that direction. The SPY is the ETF over the S&P 500. So you know the SPY is going to be moving in the direction that the Mag 7 is moving in. So what do we look at? We look at these top 7 or 8 stocks. Who are they? Apple, Amazon, Microsoft, Meta, Nvidia, Google, Tesla, Broadcom. You've heard these names. Everybody knows them. These are the big titans. These are the big dogs. And as they go, so goes the S&P 500 and so goes the NASDAQ. So this is another area we look to confirm our direction. Are the Mag 7 stocks climbing today? In fact, they are. So I come over here every day. I take a look at, I call this my leaderboard. This is my watch list. And I'm watching the Mag 7. What's going on here? What's going on is that we've got Nvidia up 3%. We have Broadcom up 1.6. We've got the Mag 7 ETF up 0.6, Microsoft up just 0.3, Meta up just over its flat line at 0.16. And then we've got a couple of laggers. We've got Apple just below its flat line and Tesla down about 0.7. So a little bit of a mixed bag, but by and large, the mags are positive this morning, which again, we're going to need to see that if we want the market to continue upward. And sure enough, we are pushing upward. So the next question becomes, how far? How far can we go on this push? Well, there's a couple of ways we look at that. I look at options positioning. I look at gamma. I look at support and resistance levels. I look at highs and lows of previous days. So I'm watching all of these things to determine. Once we've determined our direction, and our direction for the day so far is up, once we've determined that, now we got to look at how far, right? Do we just take a call just because our direction is up? No, because watch this top here. Again, we talked about that at the top of the stream. Top, so far top. This is what we would call a triple top starting to form right here. Triple tops typically are bearish. It's a sign that the bulls have tried to hit this top a couple of times, triple top, so 3 times. They haven't been able to break through it yet. Now, the more you hit a level, the weaker it becomes. So could they push through it? Absolutely. But some ways that we determine how far we're going to go is going to be the options flow and the gamma flow. So if we come over here to our option chain, this is where we trade the options. This is how much the options cost. This is what the strike prices are. I keep the volume on my option chart. So the volume here is telling me we've got some heavy volume sitting at the 680 call strike. And we've got some volume above at 681 and 682. We've also got some heavy volume coming in at the 679 put strike and the 678 put strike. So we're heavier on the call side, but we're also, looks like the puts are picking up a little steam here. So by and large, that's telling me for right now, we're sitting at 680. That looks like our top. So that combined with the fact that we're looking at a triple top, I'm not going to take any calls here. I want to wait and see where we go. I want to wait and see if we break through this triple top and push up higher for another leg higher, or we start getting some downward momentum. Now, there's one more thing happening today, and that's called OPEX, options expiration. I'm throwing a lot at you here. If you're a beginner, do not feel like you have to understand even a third of this. It's okay. I know what's going on here, so I'm trying to pass it along to you, and I'm trying to give you my overall thought process on how to trade today. The options expire. Options expire on different time frames. Some options expire daily, some weekly, some monthly, some quarterly. Monthly options are expiring today. That's what's known as OPEX. That can be a volatile experience, meaning that the big money can't move the way retail can move, right? We can take a trade, you and I, we can take a trade in and out within seconds, right? We're trading relatively smaller accounts from big institutional money. Big institutional money is trying to turn big ships, right? So that takes a long time. They can't just jump out there with, millions of dollars of orders and just, pound the market. They can't do that. First of all, it'll affect the market, it'll manipulate the market. But second of all, it's going to go against them as well if they try to do that. So what they do is they move more slowly. They set in the options market, they set their trades out at those expirations. Now, when we come close to these expirations, all options expire worthless. So big money is going to have to get out of those positions and they're going to have to re-enter some new positions. That's known as OPEX. What can happen on OPEX or a day or two prior is that we can see big swings, big swings in the market. We see big rises to the top, big drops to the bottom. And that a lot of times is a manipulation of the pricing so that these institutions can get in and out where they need to, where they want to. So that's a theory. It's, some people will tell you there is no manipulation in the market. I would disagree. But that's what happens at OPEX. We start to see the big swings. Now, we may not see a swing today. We saw some pretty big swings yesterday and some swings the day before. So has big money already repositioned themselves? It's possible that they have. And the last thing that's affecting our trading decisions and how far we're going is something called the Santa rally. Now, that is the last 5 days of the year and the first 2 days of the new year. Those 7 days make up a little seasonal area that we call the Santa rally. For decades, we've called it the Santa rally, and it just means that these 7 days doesn't start yet today. The 7 days of the end of the year and the first 5 days of the end of the year, first 2 days of the new year, we expect to see seasonally runs to higher highs. And that's because of a lot of reasons, but institutions are resetting, retail is moving money. It's a thing. 79% of the time, the Santa rally materializes and we get a push up on those 7 days. So we are moving into that period of time. Next week begins the Santa rally season period. And so that's another reason why we are seeing some movement up here. That's a lot of explanation there for the big macro view on the market. But that is what I'm looking at. I'm looking at bullishness going into the end of the year. I'm looking for the S&P 500 to hit potentially 7,000. That's going to be about 170 points overhead. I think that's really doable. That's a little bit less than a 3% move from here. That we can accomplish really in the next week and a half. I think that's possible, very possible. So as that's the big picture, I'm bullish. Now, does that mean that we cannot drop? No, it doesn't. We never just go up in a straight line. We wave. That's what the market does. Zigs and zags and zigs and zags. We never go up in a straight line. So are we bound to get a few down days? Sure, we are. But by and large, the direction for me is up, going from here to the end of the year. Now, making trading decisions, because I'm a scalper, I trade 0 days to expiration. That means I trade today's expiration. And scalper means I'm in and out quickly. I'm not looking to stay long time in a trade. I'm looking to get in, take that scalp and get out, right? And I don't shoot for the fences. I'm not aiming for huge, 40, 50, 60, 70% wins. I'm not doing that. I'm taking small wins, usually roughly between 5 to 15% wins. That's really what I'm looking for. And I keep a win rate of about 90%, sometimes a little bit less, sometimes a little bit more, roughly around 90%. So the way I keep that win so high is taking smaller wins, right? Um, so that's my style. I'm in and out quickly. I'm hitting those trades and I'm trying to get out quickly. Now, sometimes I get stuck. Yesterday I did get stuck in a trade and I had to hold it for a long time. I was on the stream. I had to hold it for a long time. I did not stop out of that trade, even though I was going to. I went ahead and held that and averaged it and waited for it to come back. It did turn into a winning trade, even though it went against me pretty hard for a while. But I don't want to be in those types of trades. I don't want to be in the long trades. I don't want to be in the sideways moves. I want to be in the fast trades. I like volatility. So as we try to make a decision here on a trade that we would take, I'm still looking at this top here, just at 680. So you can see where my cursor is sitting right here. Like I pointed out, top, top, top. We have not broken it yet. Now, looks like it's trying to push. So let's see if we can break it. The trade for me is not going to be a call right now. Like I said, we're too close to this top. We are over the VWAP, so that obviously it's telling us we're bullish. We are, but we're just too close to this top for me to take a call right here. So right now what I'm waiting for is a little push down. Maybe we'll come back down and test this VWAP again one more time. And if we do, if we come through the VWAP and start moving farther down, we could consider puts. Remember, puts make money when the market goes down. So we could consider puts. If we come down through this VWAP and make some lows here, or we could consider calls again, but I'd want to see the price come down a little bit in order to give us enough room to bounce up to this top again in case we don't break it. So that's my trading plan for the moment. So right now, this has been just a long stretch of what we would call chop, just a long stretch of chop. So starting back here at about 9:45 Eastern, going until now, we have not gone very far, right? Little ups and downs, but not very far. These moves for me are not quite big enough to trade, even though we can see where they are. Here's the top. Here's the bottom at the VWAP. Here's the top. Here's the bottom at the VWAP. We can see where they are. I'm not going to take a trade inside this range because it's just a little too small. The risk is not worth the reward. So the risk of a bad trade is up to a 50% loss. That's where I usually stop out, is at 50%. So is it worth this little move to make a few percent when the loss could be up to 50%? Not for me. I want to see bigger moves. I want to see us break out of this range. So that's what I'm waiting for right now, is for us to break out of this range. So I've said this before, and maybe you guys have heard me say it. 90% of trading is waiting. It's just waiting and being patient. And trading, above all, is a pretty emotional experience. And so to be a profitable trader, a consistent trader, it's really the emotions that you have to master. So there's a lot of emotions that come with trading. Boredom. Right now, this is boredom, right? Just sideways moves, nothing to trade right here. We just have to wait for this range to break. But then there's also waiting for the setup. That's what we're waiting for. Or being in a trade, waiting for it to go in your direction, waiting for the market to show its hand. Lots and lots of waiting in trading. Other emotions in trading, you've heard it a lot, I'm sure. FOMO, that's a big one. Fear of missing out. You see a move like this at the beginning of the day, and you want to jump in. Right now, we see these larger candles. Look at these big, beautiful candles here. You see that 1, 2, 3, 4 big, beautiful candles in a row. Your heart starts racing. You start saying, I want in, I want in. That's a nice trade. That's FOMO. You don't want to take a trade because you're chasing. You want your setup. We're looking for our setup. So FOMO is an emotion in trading. Fear is an emotion. I'm in a trade and I'm fearful that I'm going to lose it. So I jump out too quickly. I don't get my profit. Greed is another emotion. I'm in a trade and I see my little profit at 10%, but that's not enough. That thing, I need that thing to go up here so that I can make 50%. So greed factors in. There are so many emotions that will affect your trading. There's revenge trading. So you took a loss, you took a hard loss, and that hurt. So what do? You get into the next trade 3 times bigger because this one's going to win and make up for that loss. That's revenge trading. That's a bad idea. So these are all the emotions of trading. And I've built rules around my trading that help to control me and not let me get into these emotional trades. So, for example, I will not FOMO into a trade. I won't take the same move twice. I don't trade it. It's just a rule I built because too many times I have bought the top or sold the bottom. So if I trade a move and I get my 10% and it keeps going like this move did, I am not going to trade that again. I'm not going to chase it. I'm going to wait for the next move. So that's one of the rules I built for FOMO. Revenge trading, a rule that I built is I keep my position sizes consistent. So it's really important to make sure that you're trading with the same amount of money in every trade. If you have a system, I have a system. I have my entries and my exits. I know when to get in, I know when to get out. I keep my position size consistent because here's why. Even though I have a 90% win rate, that's roughly breaks down to 9 out of 10 trades that I'm going to win. One of those trades I'm going to lose. And my max stop loss is 50%. So I'm taking tiny wins, and that's okay because I'm taking 9 out of 10 tiny wins, and then I'm taking the 10th trade, or it doesn't have to be 10th, it could be anywhere in the lineup, but that one losing trade, I can take up to a 50% loss. Now, if I have gotten in, let's say every trade I've traded $1,000. Every single trade I've traded $1,000. I've made 10% on every trade. I've done that 9 times in a row. Now I'm up $900. Well, now I'm feeling cocky. I'm feeling good. I'm up 9 trades. I'm going to trade $5,000 because I want 10% of 5,000, not 1,000. So I trade at 5,000. Well, guess what? That's my losing trade. That's my 50% loss. I've just lost $2,500 to a $900 win. I coach traders all day long, and I'm telling you what I just described happens over and over and over. That is one of the biggest issues that I see in traders is that they are not consistent in their position sizing. They're taking way too big of losses on way too big of positions, and they're taking way too small wins on way too small positions. That happens over and over. So the answer to that is keep your position sizes consistent, follow your rules, get out at your max profit, get out at your max loss, follow those rules. And if you have a system that works, you'll remain profitable. So let's talk about what I'm looking for when I get into a trade. Now, right now, we are just barely trying to beat this top. Could we trade calls here? Potentially, yes, because we're beating this top. Could we take a call here? Yes. Should we take a call here? Maybe we could. We do have the MACD rolling over. We're beating this top. We are over the VWAP. We're sitting at 680. Now, that is the call wall for the gamma. But that doesn't mean it has to stay the call wall. That can change. So I use a third-party platform, Cheddar Flow, that measures gamma for me, and I'm always watching gamma flow. We are sitting at the 680 call wall. Usually what that's going to mean is that if that gamma wall doesn't change, we probably won't break 680. Now, if it changes and starts moving upward, then yeah, we could. But right now, it has not changed. So right now, it would be a little bit of a risk to take a call. It could hit. We could make money on it, but we're just sitting at 680.3. So I think I'm going to let this move pass because we're just a little too close to that call wall. However, we're very bullish today. So these are the things that you have to weigh in your head, right? All right. Does anyone have any questions on what I just talked about? I just threw a whole big mouthful at you. And if you're a beginner trader, it's going to be too much. Do not feel like you need to understand that at all. All this stuff takes time. But if you have any questions, go ahead and drop them in the chat. I'm happy to answer them. I'm here just being patient, waiting for a move. So, um, and trust me, I will jump in when I see it, when I see the right setup. I'll let you know. So if you have a question, drop it in there and I'll answer it the best that I can. All right. Russell giving us a nice push today as well. The Russell is up 1%. And let's see, the NASDAQ, the Qs are up 1.14%. So everybody bullish today. Okay, Gavilan asking, how do I gauge gamma? Great question. Great question. Let me share my screen, a different screen with you real quick, and I'll show you the product that I use. I am using a third-party app called Cheddar Flow. So let me share that screen with you and I'll show you what it looks like. Hold on just a second. All right. This is the gamma screen on Cheddar Flow. And you can see the big long green bar is sitting at 680. This is called the call wall. We have $2.8 billion in gamma sitting here. Our put wall is down here at 670, and we've got 338 million. Look at the difference in dollars between the call wall and the put wall. We are in positive net gamma. We see that right here. Positive net gamma by 5 billion. That's a decent amount of net gamma. And I am looking at just today's expiration. You can also zoom out and look at all of the expirations. I prefer to look at just today's. This is telling us we are very, very bullish. As we already know, we are bullish. But the gamma is showing us where those strikes are. So when we're in net positive gamma, the likelihood that we are going to stall here at the call wall is great. Now, can they move this call wall? Yes, they can. Can we push up through the top and this gamma moves? Yes, it can. It is dynamic. It's moving consistently. But this is Cheddar Flow, and this is what I use. Hopefully that helps you, Gavilan. Bill saying we don't see anything. Did I not share? The screen is black. All right. I see Cheddar Flow. Let me try resharing. Is anyone able to see that? Anyone able to see the Cheddar Flow? Okay, so sorry about that. Maybe I didn't share it correctly the first time. I apologize. All right. So yeah, this is Cheddar Flow, and what I was saying, let me go over what I just said because it probably didn't make sense if you couldn't see the screen. All right, it was black for the entire conversation and then it came on. Can see it now. So weird. Maybe that was just a little glitch in the system. So odd. Okay. But let me go over that real quick because, and I was speaking, but you couldn't see the screens. So right here, we are seeing 680 is our call wall. This is our net GEX or gamma. We are up at 3 billion. That is a big number. And that is the call wall. So this down here, 670 is our put wall. And we're only sitting at 350 million on the negative GEX. So our total net gamma exposure right now is 5.7 billion. That's a good amount. That is bullish. That's just darn bullish. And again, this can move. Like I said, this can move. So, but by and large, wherever we've got the call wall is where we're probably going to stall. And this is exactly what we've been seeing on the charts. So let's go back to the charts and let me end this share and get the charts back up here. Go. All right. Is that on Schwab? My charts are on Schwab. Thinkorswim, Gavilan. The Cheddar Flow is its own, that's a standalone product that I pay for every month. But these charts are Thinkorswim. Yes, they are. Great question. Thank you. All right. So we're still getting this kind of slow climb. Now, right now I'm looking at the NQ, but let me get back to the SPY. NQ is just the futures over the NASDAQ. All right, so you can see we're still in this 680 zone. I'm going to make this chart just a little bigger for you. We're still in this 680 zone. I'm going to zoom out a bit. Now, we did make a little bit of a higher high, right? So we were holding this triple top, 1, 2, 3 tops. And then what did we do? We pushed up through it. We still have not been able to beat yesterday's high of day. So that is sitting at 680.7. So another confluence for the idea that we may not beat 680 today. Now, again, we could. We're very bullish. We've got strong buying pressure. So we certainly could push up. But as of right now, we've not been able to beat the 680 top. All right. If we start coming down here toward the VWAP and we break it, now we've tested this VWAP once, twice, 3 times, and it has failed. Bears have failed to break down through the VWAP 3 times in a row, telling me that there's just a lot of buying pressure. However, as I've said before, we're stuck in a little bit of this range, even though we've made a little bit of a higher high. There's just not enough room for me to take an upward trade right now. So that's where we're at with the patience. This is where we're at with being patient. Not able to take an upward trade, not able to take a downward trade, just moving sideways. That's okay. That's all right. I'm okay with that. I would much rather wait for the right setup. What do they say? Cash is a position too. And it is. Cash is a position. So that is not what I want. Let's zoom in a little bit on our VIX here so we can see what's going on. VIX is getting a little bounce here while we're getting a small move down. Nothing major. Nothing much happening right now. Again, to take the puts, I'd want to see a move. For me, it doesn't necessarily have to cross the VWAP, but for a newer trader, I would definitely recommend not taking those trades until it does cross. But if I see some other things that are telling me that we could get a put, then I might take that opportunity. Right now, we're not. There's no selling pressure here whatsoever. This is all buying today. Now, could we take a call here and see if we could hit a new top? There's just, for me, like I said, not enough room. Not enough room here. Bitcoin is responding nicely after another dip yesterday down to 85. Bitcoin is back up to 88. And I'm bullish Bitcoin. I'm bullish Ethereum. I think that these are going to really move up in early 2026. I think we're going to see some strong upward moves in the crypto space. All right, still climbing here. Just itty bitty little moves, nothing major. So our recent top was 680 point, I'm going to call it 680.1, and we're sitting at 680.2. So basically we've gone nowhere, even though you can it sort of feels like a climb. If you look again at the tops, we really haven't gone anywhere. So we're just kind of sitting here. A little bit of a higher high, but nothing major. No reason to take a call, not for me. So, and also remember on OPEX, we can see big swings. Now, like I said, we saw some swings yesterday. We saw some the day before, but we can see them on today as well, because today is the actual expiration. So they have until the end of today to reset their positions. Based on the movements I've seen in the last 2 days, they've done a lot of resetting already. So we may or may not see swings today, but be prepared because it could happen. Right now, just continuing this sideways action. All right, so if anyone has questions, it's a great time to drop them because we've got no trades in front of us right now. Not getting the setup that I want to see here, and just have to wait. We can talk a little bit about the MACD. That's it's a great indicator, one of my favorites. I feel like the MACD is probably one of the better indicators out there. Very tried and true. It's been around forever. It's got a high success rate. The MACD is this down here. I'm going to make that bigger so you can see it. I'm going to take off this other study so that we can see the MACD a little bit more clearly. And never fear, I am watching these charts all the time, like a hawk. I am constantly watching the charts, getting a little push down here. Getting a little jump on the VIX right here. You can see it. All right, coming to the 50, that's this blue line right here. That's the 50 period moving average. On this chart, it represents 51 minute periods. So whatever chart you're on, whatever time frame you're on, the moving averages will reflect that period. Whatever your time measurement is, the moving averages will reflect that period. Okay. Little move down here. Not too bad. So let's continue talking about the MACD. MACD is the moving average convergence divergence, and it is basically taking, let me make this so you can see it better. It is taking two moving averages and kind of smoothing them a little bit and looking at them together. It's these two lines here make up these moving averages. And when when the MACD measures the distance between them, that's how it tells us that we have momentum. So the MACD measures both direction and momentum, which I like about that. It tells us what direction we're going in, and it tells us what is the momentum, how fast, what's the velocity, how strong is this move, right? So the MACD has 4 parts to it. These 2 lines, this 0 line, and this histogram. I guess that's 3 parts, isn't it? 0 line, histogram, and these 2 moving averages. So when these lines cross each other, the histogram changes colors. So in this case, we got the lines crossing right here, and the histogram turned negative. So MACD was telling us we're about to move down. Well, MACD is pretty accurate most of the time. Now, as we move down and the velocity or the momentum is increasing, these bars will get longer. When it starts to slow down, we will see these bars get shorter and darker. And so as you can see, these bars are getting shorter and darker. Look at the price. We are no longer moving down. We're moving into sort of a little sideways bump here, right? MACD caught that. It said, we're not really moving down. The momentum is slowing. We might be reversing. That's what this is telling you here. So then we come over here and it crosses again. Right here, these 2 lines cross. I am just looking right here. We could be getting put signals, possibly. Okay. Getting a little bump here on the VIX, coming down. We broke down through the 50, breaking down through the 100. Again, this is just a minute chart, so it's busy, it's noisy. We get false signals, but these are some landmarks here to look at. Let's see if we can come down and test this VWAP. All right. So slowing down just a little bit right here at the 100. Let's see if we can break down a little farther. We've been sitting at 679, 680 for a really long time. So let's see if we can break down just a little farther and get some kind of a downward move today. We have not gotten one all day long. So we'll see if we can get a test of the VWAP here. All right, back to the MACD. We were looking at when it started to come back up again. And I'm not sure which part of the chart we were looking at, but let's just look here. So we were talking about when these lines come back up and cross each other. Now the histogram turns green. And you can see that we start pushing back up again. So once again, histogram turns red, lines cross, we're coming back down again. The MACD is a really good indicator and I use it every day. When you use it together with the VWAP, you can get some really good results. So for example, here we came down to the VWAP, we tested, we could not break through, we rejected, came up, came back down, rejected, came back up, and here the MACD crosses. Right here at the same time that we rejected this breakdown of the VWAP and came back up through it. That's a good entry. So if you combine those two indicators, you're going to do pretty well. So the MACD crosses here, crosses the VWAP, MACD moves up over the 0 line, and we get, boom, a nice climb. That's a good trade. Okay, so we've got Gavilan asking, what are the red and green dots at the bottom of the bars? On the max, on the MACD. Red and green dots. Are you talking about the histogram, Gavilan? Down here on the MACD? All right, little rejection here of the 100. See how it came down to the 100 and just boom, bounced right off of it? That's a rejection. So another reason why sometimes it's a good idea. Okay, Gavilan. Okay. So yeah, that's a great question, Gavilan. These bars here are what we would call the histogram. And let me see if I can make it a little bigger for you so that it looks a little bit more clear. I'll zoom in. So when these two lines here are crossing, that's when the histogram will cross the 0 line. So this pink line right here is the 0 line. And these two lines determine when the histogram is green and when it's red. So when this blue line goes below the beige line, we're going negative. And that's when these bars start getting created below the 0 line. So as we start moving downward, you will see these bars get longer and get brighter. And when we start moving up, they'll get shorter and darker. And that's just telling you momentum is fading. Then it kicks up again. We go back down. These bars get brighter and longer. Momentum is picking up. And then right here, momentum fades again. Now we're getting across to the upside. So this is this is what they would call the histogram. And so when these, again, when these lines cross, we're going to get across above or below this 0 line, and that's what will turn these bars green or red. Hopefully that helps, Gavilan. The red bars are telling us we're negative, we're going down, and the green bars tell us we're going up. Now, again, no indicator is perfect. They all fail. But by and large, the MACD is a pretty good indicator. And like I said, if you use it together with the VWAP, you'll do pretty well overall. All right, so just a little small breakdown here, nothing major. Still just ranging right here in this 680 zone. That's right where we're sitting at the 680 zone. Okay, Gavilan saying yes, it did. Okay, good. Glad to help there. All right. So again, just kind of in no man's land here, and sorry that it's boring. We can't take a trade, but we just don't have the setup. So once we get it, if we can get it before the stream ends, that would be great. We'll see. But we'll keep watching. Again, some people say to me, this is what I do for a living. I don't do anything else. I trade. I set alerts out. I do live streams. I train. I coach traders. That's what I do. This is what I do for a living. And some people say to me, how can you just stare at a screen all day long? It would drive me crazy. but it is what I do. I, I stare at these charts all day long, and I'll tell you, I like it. I've learned to really enjoy reading the charts and watching the price action. For me, it's exciting. I enjoy it. But that is, like I said, a big, big part of trading is just being patient and waiting for the setups. If you've been burned a few times, you know what I mean. You don't want to get into a trade that's going to eat your lunch. You just don't want to do it. You're better off sitting it out. All right. We are coming up toward the end of the stream, but so we weren't really able to take a trade just yet. Now, again, so going forward into today, if we break down through this VWAP, I'm open to puts. If we come down to the VWAP and reverse back up, I'm open to calls as long as we've got enough room to take the upward trade. That's important to me, that we have enough room so that the risk is the reward is worth the risk. We need the risk to be in line with the reward, right? So I want to see enough room to take an upward trade. That's my trading plan going forward. So today, unfortunately, we did not get the setup we wanted because we're just sideways, but it will come. It won't stay sideways all day. We'll be patient. We'll wait for it. You can set alerts too. Thinkorswim allows you to set alerts on your charts. So you can set an alert, and if you want to go make yourself a sandwich, you can set an alert and say, okay, if we break down through 679.1, if we break down through there, ding me, right? And you can have it. Thinkorswim will let you even text alerts to your phone, which I think is pretty cool. So you can set that alert, and you could go make yourself a sandwich and wait for the market to go where it needs to go, and for the alert to play out. So right now, again, we're just in the middle of this chop, and that is going to do it for me today. It was a real pleasure getting to know you, Gavilan. Glad you were here, Bill. Good to see you. And we will be back again tomorrow morning at 9 a.m. Mountain. And we will we'll be hoping for a trade. So I said tomorrow. I should have said Monday. We'll be hoping for a trade Monday. Pretty sure we'll get one. We usually do take a trade every day, sometimes more than one, sometimes two or three. But we'll wait for it for today. We'll be patient. We'll sit on our hands and we'll watch for our signals. You guys have a fantastic rest of your day. We'll be back on Monday. Bye for now.